Let's get started with Apple, right? So this is by still, I think, the world's largest company by market capitalization. It has a business which runs principally around the core hardware products, the iPhone. They're about to bring out results tonight after the market close.
Yeah.
They are going to be delivering eye-popping profits from the iPhone business. But remember, there's also the Macs, there's also the associated services revenues that come from iTunes, that come from all the other stuff that they sell you, app development, app store, and that sort of thing. So it's going to be a sort of a funny set of results because it's sort of in between. Let's get those market capitalizations. We're looking at $540 billion.
Yeah.
We're talking about a PE ratio which is laughably low at 10.83. And a dividend yield of 0.57. That was the dividend, in fact, in terms of cents, 57 cents.
Yeah.
So in percentage terms, what do you see?
2.1%.
2.1, that's damn high for a company that used to pay nothing.
But maybe too high, which we can explore.
Well, let's talk about Apple, because what are your expectations for the results?
Yeah.
And do you think this is a company which is sort of mature or not?
So there's basically two camps. Those that are saying this is a business that is ex-growth. Apple, the iPhone sales make up almost 70% of sales, and really, so iPhone sales in China is really defining the success or failure of Apple going forward. And I guess a lot of analysts are concerned about
and we
those
saw
sales.
a big surge in those like a year ago, but then the last quarterly results looked a bit soft, where suddenly, it looked as though maybe it's a premium product, not all that many Chinese people can
And I
afford
think what you're
this stuff.
seeing is the rise of major competitors there, and numerous competitors all leveraging off the Android platform to introduce cost-effective and very powerful
so you're talking
phones.
about Xiaomi and all these other
That's
sort of
right, yeah.
Okay, but we know the iPhone 7 is coming. We don't know whether it's going to have a different form factor, whether it's just going to be an upgrade of all of the insides. There's also the Apple SE, which I think is like a jazzed up insides that looks like an iPhone 5. And the feeling is just generally that people are getting this wrong, that it does have this replacement cycle and that it'll at some point surge higher and that you ought to be buying them.
Yeah, so what analysts are seeing is there has been this replacement cycle, and that's really been fueling and continuing the growth of Apple in the iPhone sales, but that has been slowing. So the incremental, the iPhone 6S over the iPhone 6 over the iPhone 5, the refresh rate is starting to slow. I mean, these phones are so powerful, they can do so much.
Yeah.
What do you need a iPhone 7 for that the iPhone 6 isn't covering? Obviously, there are those enthusiasts that always want the latest product.
Yeah. Exactly. Well, let's look at the chart, because what you'll see there is a reflection of that. Nice move in 2013, 2014. Really, the iPhone 6 cycle was very exciting. But then they hit a high of about $130 a share back in the middle of 2015, and since then, in difficult markets, going around about sideways, drifting away. And that dreadfully low price-earnings ratio, I mean, they trade like it's a Chinese steel mill. You'd think they were going out of business with a PE of 11.
The problem is they're very product-centric, so they don't have nice sort of annuity revenue
and as
flows.
big as the services flows are, those are relatively small compared to the other things.
Just because it's dwarfed by these iPhone sales.
So, I mean, I own lots of Apple. My clients own lots of Apple. I'm very bullish on the outlook for Apple. I think they're going to buy Tesla and Uber somewhere along the way and become, even more dominant than they are. But I don't know, maybe I'm just a hopeless romantic. Would you buy them now? You hot or not on them?
I feel their closed system and network is actually a little bit a relic of the past, and I think they have serious competitors that are being much more innovative than them. I'm concerned. I think they're a little bit of a potential tech dinosaur.
Okay, so you're not hot on that, which means in effect that what you're saying is that you think the cash flows will be good, but they deserve to be at this low price-earnings ratio because the earnings going ahead are perhaps going to be a bit disappointing.
Ex-growth.
Okay, that's it. That's the way it is, different opinions.